actually about building our foundation and further strengthening it, right? So it's about growing meals and it's about becoming a more relevant omni-channel brand, which we already are today, but further building on that. So it's about growing AUV for us. I think our strategy has three levers. The first two are around growing AUV, and the third one is about growing our network. So we're going to use meals and ensure that we continue to cement our market leadership during this category, during this day part, because consumer spend is going to be focused more towards this day part. And we're also going to ensure that we offer a great experience to our customers across all our touch points and hence be a truly omni-channel brand. And as a result of that, grow AUVs. And finally, we're going to grow the network by ensuring that our brand relevance and product market fit continue to grow and use our real estate competitive advantage to grow our network faster than ever before. We've identified opportunities in the south and small and emerging towns where we plan to penetrate faster and have a larger presence.
So, small and emerging towns, you highlighted that part. Obviously you are looking at, increasing your stores also to 580 to 630. That's also almost double again from, the current levels that you're looking. 337 is what was there in Q2. So, in terms of that, then would you be making more investments? Will it be through internal accruals or will we be raising some capital? How is that store expansion going to work out for the company?
So through our Vision 2027 and our volume growth, which we plan to convert into strong profitability, in fact, plan to generate 18 billion rupees in cash flow and invest roughly around 14 billion rupees in capex. So I think our expansion plans will be well funded through our internal accruals, and we'll continue to maintain a strong balance sheet and capital efficiency like we always have.
And then what about your expansions? Will it be more of further into the smaller towns, smaller cities, where you're saying you're seeing good growth coming in? Is that the more of the focus area, or is it going to be, in bigger towns, metro cities as well? So a horizontal expansion plan or more penetration and a vertical expansion plan?
So network expansion for us is actually about identifying the right markets, getting the right real estate through our capabilities, which we feel are a competitive advantage for us. Real estate is, extremely challenging, but for brand McDonald's and Westlife, it's been, extremely rewarding because of our real estate competitive advantage. So we've identified a couple of markets like the south and smaller and emerging towns where we plan to penetrate faster and expand our presence and make it larger. But at the same time, we're going to continue to grow our market leadership in the west and other metros and larger towns. So holistically, we're going to be, available in all our regions, but we're going to penetrate faster in the smaller and emerging towns as we've seen urbanization really support momentum.
Okay, and just want to understand in terms of, the revenue per store. FY16, it was 3.9. Currently somewhere around 6.3 to 6.5 crores is what we are seeing in terms of revenue per store. Going forward also, when you just compare it, you're expecting a 4,000 to 4,500 cross sales and a growth of around stores of around 580 stores. So when I just divide it in just a math calculation, it comes somewhere around 6.8, 6.9. So, why are you, the level that we're seeing currently, there's not much of an increase coming in the next 5 years for the revenue per store. Why is that so? What is the strategy?
So, AUV growth is going to come across two levers of meals omni-channel for our existing base of stores. We also are adding a large number of stores to the network, which is roughly around 300. So as you, kind of expand and double the base, there's obviously, a catch-up effect that's involved. So what we anticipate is that our existing basket of stores are going to continue to grow faster. In fact, we shared color of our top 10% stores, having double the AUV of system. So we've shared what could be possible. But at the same time, we're also adding 300 stores to the network, which might take a little longer, to scale up the AUV. So as a result of that, we've landed at this target, which is around doubling sales, opening around 300 stores. And we're quite satisfied that this will help us achieve market leadership in a very challenging retail landscape.
Absolutely. And also just want to understand that in terms of your margins, yes, currently, when you look at margins, somewhere around 17%. I'm taking the whole approach of, Q2, it's 17% as of now. Going forward, you've given a target of 18 to 20% by 2027. So in terms of margins, don't you think we're being a bit conservative?
So actually, our current margin, which is pre-Ind AS, is around 13%. We're talking about, building that up through our P&L levers to around 15 to 17%. which translates into a post-Ind AS margin of 18 to 20%. It's actually, more an accounting kind of nuance, where as we're opening more stores and the leases are, increasing in terms of number of years, you're seeing the, Ind AS impact go down a little bit. So actually the number that's more important is from current 13% of pre-Ind AS to around 15 to 17% pre-Ind AS EBITDA margin as we move forward.
So from 13% to 15 to 17%. So that's 400 basis point expansion in the next 5 years. Given that the current volatility that we are actually seeing, you don't know when what is happening and the prices just increase for wheat or, tomato prices, onion prices, suddenly we're seeing them soaring. How does this actually work out, and what would be your strategy actually to, take control of that inflation? Because that is something that is unprecedented, unexpected. You don't know when it's coming.
So, it's all about long-term value creation, and hence profitability is extremely important, like you mentioned. So what we've done is, we've spoken about growing volumes, but at the same time, we want to convert that into profitability. We've detailed out some levers, whether it's product mix and pricing, whether it's cost optimization. And lastly, this volume growth brings in a lot of operating leverage for a brand like McDonald's. That's the beauty of the business model.